What just happened, 10 minutes ago, is the nightmare result, the retaliation. The good news, I think the Fed is going to be lowering interest rates. I think they have to lower interest rates. At first, I thought there was no chance of a May cut in rates. Now I think that chance has been increased dramatically.
Jeremy Siegel sounding the alarm on what appears to be the nightmare scenario, whereas instead of discussions, we are now spiraling into retaliation with China announcing huge increase in tariffs. Now, Scott Bessent the day before warned that this is the one thing that other countries shouldn't do. China chose to do it. And is it spiraling us into one of the largest stock sell-offs in U.S. history? And how does this relate to the housing market? We're going to get there, but let's listen to Scott Bessent the day before China retaliated.
We're going to have the baseline tariffs come into effect first, then there are reciprocal tariffs, a little bit more of a different rate for each individual trading partner. Are you preparing to negotiate with some of these trading partners before that tariff rate comes into effect on April 9th?
Well, I think there have been a lot of discussions, but I think we're just going to have to wait and see what would happen. What I would say, Anne-Marie, is I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation. So we've got a ceiling, and then we can see if there's a different floor.
So you sound like you're ready for negotiation with a number of these partners. Has the European Union, has China, has India, have these countries reached out?
Well, they've all reached out, but it's going to be up to President Trump to see what he wants to do. I think the mindset might be to let things settle for a while. Their tariffs or non-tariff barriers have been on a long time, so we'll see where it goes from here.
If you haven't picked up on it, the Trump administration does not care about the stock market at this point. In fact, I think they see the stock market as the reason they can't get bonds lower. In my opinion, their number one objective is to bring the 10-year Treasury below 4%. Why is this important? We have trillions and trillions of dollars we have to refinance this year. If you can create a situation in which the deficit gap closes, then the federal government becomes a lot more attractive. They can actually lower interest rates even further. It becomes just like a self-fulfilling doom loop if you can't close the gap. If you do close the gap, it becomes a self-fulfilling positive, and you reap the benefits of lower interest rates, and everybody reaps the benefits of lowering borrowing costs. With interest rates dropping and mortgage rates dropping, the question is what is going to happen to real estate? Well, there was one part of the market in the absolute disaster of the stock market the past few days. There was one part of the stock market that actually went up, and it was kind of interesting. Some of the largest stock price gains on Friday had to do with home builders and the home builder section. So if you think this is bad for real estate, I would just say I don't know that it is, and the market doesn't necessarily believe that it is. In fact, they may see a safe haven in home builders who have been beaten down, but now are getting lower interest rates. And it doesn't feel like mortgage rates are tanking right now because they're still in the sixes. But if you go back to last year, we went up by the middle of April, we were touching 7.5% on mortgage rates. It is very possible we're going the other direction this year. We could be in the low sixes by the middle of April. This is over 1% to 1.5% lower on mortgage rates during some of the peak demand time of the year. Now, if we go to our daily charts, where's our demand for right now? We'll come back to the active listings, but you can see that our demand is actually just slightly above where it was last year. So it's not skyrocketing, but it's hard for me to imagine if mortgage rates are 1.5% lower than they were last year, that this doesn't get a significant boost. And so if I had to guess, and it's a guess, my guess is that we're going to be 5 to 10% above where we were last year in the peak April and May timeframe. So maybe we get up to this This is a 2023 number right here, May, and that was kind of in response to people just stepping out of the market during the panic of 2023 when SVB went bankrupt. Then it boosted up. I bet we touch that number again and we kind of run higher. Now, this is not in all counties, and that's what makes this interesting. Williamson County has actually been skyrocketing in demand. Now, Williamson County, if you don't know, that's the Franklin, Brentwood, Thompson Station, Spring Hill area, Nolensville, and Fairview. Here's the thing. It's one of the wealthiest counties in the nation. And we're seeing demand skyrocket there. Part of me wonders if what's going on here is that people are selling their stocks, which I thought would be bad for Williamson County, and they're hiding their money or they're shifting some of their wealth into either their home or wanting to buy in a market that carries more of their wealth. I kind of wonder if that's what's going on. Now, tell me in the comments if you think that people are going to shift their wealth out of the stock market and into real estate. Now, why would they do this? Why would that even make sense? Well, for one, real estate is phenomenally interest rate sensitive. So if interest rates are dropping, that's a big positive for real estate. Number two, real estate prices have actually been very flat the past few years. Since 2022, real estate prices dropped very dramatically and then they bobbed back up and they've been kind of flat ever since. This is really important because if that's the case, we've had no real appreciation in real estate, which means a lot of the bubble, not saying it's not a bubble. I mean, you still look at rent prices and you look at like price earnings. If you try to relate it to the stock market, it's still a little bit of a stretch, but it's starting to look much more attractive for a market like Nashville. Now, my personal opinion, let's look at Davidson County. Davidson County demand is still lower than where it was last year. Now, again, I think personally that this will bump up. This will bump up. But the truth is it's very uncertain right now. And, we don't know, is unemployment going to increase? It hasn't yet, but it could very well with a lot of the cuts that are coming out of the federal government, with a lot of the job layoffs, a lot of contracts. The thing that I think is the most obfuscated part and risk of real estate is where are all the federal contracts getting cut and who are those contractors and where are they employed? I think it's not very clear in the data. You look at Davidson County, they get like the vast majority of federal grants. Well, that's because it flows through the state. It's very unclear what is happening with the flow of this money. And to me, that will be a big question mark. But nonetheless, Davidson County demand is still a little bit lower than where it was last year. And if we look at active listings, Williamson County popped big time. Davidson County still making both of these counties are making new highs this year and they're popping up. The one to watch though is Williamson County. It is just growing so much more rapidly than it did last year, even as demand is staying strong. I mean, demand is up. It's a 3-year high. So it's very interesting to see how these play out. But mortgage rates, we're at 6.6. If you go back last year, we would have been at 7.5. So we're already almost 100 basis points or 1% below where we were last year. To me, that's a big, big signal. Let's move to Nashville. Let's move to prices. Because I know you guys are wondering, well, where's the price going to go? Well, I hate to disappoint you, but since we talked last week, prices have only gone up for contract, which means that prices are kind of where they were last year. There's no indication in the contracts that we're any different than we were last year in terms of price. Now, the one difference in my opinion is that our price cuts, if we just look at price cuts and we compare to last year, what we can see is that just price cuts in general never got as strong. By the way, this is inverted. So this is an inverted price cuts as a percentage of active listings chart. You can see it very much coincides with the direction of price. And what makes this so powerful is it's pushed out 90 days. So really wild when we look at this. So this is forecasting middle of July prices. What we can see is that it's basically flat. We're not going to see any real price appreciation, and maybe we see some price drops. So I would say if you are betting on the housing market, I would say contracts are telling you that prices are going to go up. Price cuts are telling you that they're going to be flat to slightly declining. My bet is that prices are just going to be very muted this year, but I don't see them dropping yet. I don't see some massive increase in price cuts that would lead me to think that we're going to see a massive drop in prices. Now, the only thing I can say on the contract piece is that we'll probably see a larger gap between where the contract is and where the price comes in. And that's just because I do think that this is a softer market, in my opinion. So for April, I said that I thought they would be down 2 to 3%. I think it's possible they could be flat. I'm starting to lean that they end up flat for April. We'll see. It's going to be very unclear, but flat to slightly down, and no real indication yet that prices are tanking. I just don't see it in the data yet. We'll see if people panic the past 2 days. If there's some panic sells out there, maybe we start seeing that. Maybe start seeing that in data. Tell me what you're seeing. Please tell me in the comments what you're seeing, because I don't see it here, but I'm not saying it's not happening. Now, last thing I want to show you, if we look at the neighborhood tracker, one of the things that I think is most interesting is what happens off market or not on the MLS. So I've made an effort. I've pulled in, this is just for Davidson County. This is just an experiment, but I've pulled in all the Davidson County records into my tracker so that we can now see off-market properties. Now, this is just in Davidson County. It's just through the middle of 24. I'm going to get the rest of the data this week. I'm super excited about it. But what's interesting about this is then you can start seeing if an area, if it wasn't on the MLS, or I don't have a record of it, sometimes, let's see if we can find some in the new build neighborhoods. Yeah, so this is actually where it's super helpful. You can see where it stopped in the middle of 24, but you can see a lot of off-market properties that I did not have pulled in the MLS, but now they're showing up, and look, they're showing up lower. So these are where investors are crushing it. And then a lot of times what they'll do is they'll take that same property and then just sell it on the MLS. So I am now pulling in this data. You can see it here. It's easiest to see in the property subtype. If you look at all caps, those are the county records. I'm going to try to change those names, but you can see it here perfectly. The site built, this is where your houses are going for. The red, these are all your off-market properties, and you can see the MLS number. It's a county filing now. So pretty wild that you can see that. Why does this matter? Because I believe over the next 12 to 24 months, we're going to see more and more off-market deals. If there is any kind of panic in real estate, you're not going to see it on the MLS as quick. You'll start seeing it in the data and the contract data, but where you will see it in county filings where people may be fire sell and get rid of their property without even dealing with a realtor. Maybe they deal directly with a buyer. Listen, buckle up. It's going to be wild out there. Interest rates dropping are generally very good for real estate. Real estate's been very flat. It has not seen the price declines. In my opinion, right now, I do not believe this heavily impacts real estate. If employment changes, or we see panic selling, or we see just a large influx of listings, larger than what we're seeing right now, I will change my view. But right now, I'm just not seeing it. As soon as I see it, I will let you know what I see. And with that, I hope you guys have the great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.